Good morning, all. CamelbackTrading.org coming to you this Thursday morning, November 3rd. We are looking at Window Trader's market profile of the ES and SPY. So we had said yesterday the market probably would not get its directional move until late yesterday after the press conference or even on today. Well, it did certainly get its directional move, as you can see, after K period did its thing. And then once he stopped the press conference, we went trend, went out with a price probe. Well, right now, the directional move is continuing the way it finished up in the last hour. As we continue to make new lows in the after hours, we have 90 minutes to go prior to the opening. We're looking at a possible gap, and we're also looking at a possible breach of the 20-day moving average and taking out last week's low, which would put on the table a possibility of an outside week down. So a lot of the good feeling has gone out of the market in the past less than 24 hours. Now, we still have big numbers. You have the job number tomorrow and everything. And you have the election Tuesday. You have CPI next week. I think, again, we talked about this. We're going to see by next Wednesday if this market is about to roll over and officially go make new lows, or are the lows in for the year? Right now, the bulls have a lot of work to do to dispel whether we're going to actually attempt to hold the yearly lows. Overnight low right now in SPY is 375.77. I'm sorry, overnight high is 375.77. Overnight low is 371.82. The one bit of good news, the volume isn't that heavy. Again, it's still 90 minutes to go, but only 700,000 right now pre-market. We did do very good volume yesterday. We did just under 127 million. So game plan. Again, people will be screaming gap and go, depending on the size of the gap, depending on if we open right on the 20-day moving average. Now, the 20-day moving average last night was at 372.09 in SPY. We're trading right above it. Now, it'll change once the day opens, market opens. We'll see where it is. But if we open right on top of it, do I really want to take a short the first time? The answer is probably no. If we open right on top of it and the gap is $2.50, $3, do I want to take a short right away? The answer is probably no, right? We're dealing with short-term traders, so you might get a responsive bounce, especially with the overnight probably going to be short. I don't know exactly how much, plus it's still early. So I'm not saying I'll take a long against that 20-day moving average, but I might not take a short the first time. What I will do is any push up, I will look for a short against yesterday's low in M. If M's low gets filled, then I'll probably get out and take another short against the base of the price probe, right? I'll continue to short this market until they prove to me they can get back into yesterday's value. Now, any acceptance back into yesterday's value, which would mean above K's low in the single prints, you're going to go get that 12-wide POC. But there's a lot for the bulls to do prior to doing that. They have to fill the gap. They have to take back the price probe. They have to fill the single prints. Now, I'm not saying they can't do it. We know how short-term traders can be vicious and emotional. But until they prove that, I would still be looking for shorts at those visual areas. Where is a long play? Well, again, if we are to open around the 20 and keep going back and forth through it, fill the gap, come back down and test it, and we can't get below it, then we'll see if we take a long and use that as a reference point to lean on for a long. Not sure if that's going to be the case. Remember, below the 20, below last week's low, this thing gets pretty light. All right, we have those very small set of single prints, which are going to probably get filled. Below that, there's really nothing. We have a weekly low, and then another set of single prints. There's a daily low, and then the yearly low. So again, we talk about price vacuums. If sellers want to get back into this ball game, there's not a lot to prevent them. Emotional trading, when it comes to short-term traders, can whip price around tremendously because you have to remember these algorithms search for things. We said yesterday what they were going to search for on the upside when the news came out. They banged every one of them to the T. Okay? It'll be the same thing on the downside if they start going. So just keep that in mind. How vicious. We went from 3,900 to below 3,800, and we're not far from testing 3,700. They can move a market. So please, please, please respect them. So again, I would be looking for shorts with lower value and a gap against those areas I told you on the way up. As far as the long, we see if the 20-day moving average at some point during the day holds. If not, I'd be looking probably for shorts the remainder of the day. And on the flip side, any acceptance back inside yesterday's value will go back to the 12 wide point of control. And then just on the chart quickly, so here's the weekly. We took out last week's high by less than $1. Is that a look above and fail? Well, right now it looks like it possibly could, because we're about to take out last week's low. Now we have to do it in regular trading hours, not in the pre-market, but if we do, the weekly is firmly back into balance. We'll see how much we get to the downside to determine, is it just a 2-week balance, or are we going to encompass this entire thing and now be in a 7-week balance? That will remain to be seen. And then on the daily went down yesterday. We're about to come out of it again to the downside. Now look at this. 2 things to keep in mind. Here was that trend line from the lower highs. We broke it for how many days? 7 days. And we might possibly have our next lower high put in. Each time we've done that, right, we've gone and made new lows on the year. So it's going to be critical for the bulls to reclaim this balance at some point sooner than later. If we get below this trend line, which not coincidentally, look where it is, right where the 20, and start getting acceptance below, your last line of defense before the yearly low is probably this 360, 354 level. You don't hold that, there's nothing really to the yearly low. Good luck trading today. I will be leaving a little after 12:30, so I'm only going to be trading for half the trading day. I don't know if I'll be back prior to 4, but the video will be ready this afternoon. Have a great day, all.